Welcome back to Business Week here on Arise News. Well, over the past week, global bonds and stocks retreated, especially on Wednesday, as investors scaled back their expectations of swift interest rate cuts in the Eurozone, the UK and the US. The worldwide sell-off came after the European Central Bank President Christine Lagarde signaled that borrowing costs would come down in the summer rather than spring. And she said, aside from an energy-related upward base effect on headline inflation, the declining trend in underlying inflation has continued, and the past interest rate increases keep being transmitted forcefully into financing conditions. And tight financing conditions are dampening demand, and this is helping to push down inflation. That was the ECB. Well, in South Africa, the central bank held its benchmark interest rate at the 2009 high, while signaling that its fight to squash inflation is not yet done. The Monetary Policy Committee maintained the rate at 8.25% for a fourth consecutive meeting. What else do we have? Turkey. Yes, Turkey was another interesting one because on Thursday, the Central Bank of Turkey hiked its key interest rate by another 250 basis points to 45%. The hike to the benchmark one-week repo rate was in line with economists' expectations amid an ongoing battle against double-digit inflation for Turkey's monetary policy makers. Of course, inflation in Turkey was up 64.8% year-on-year in December, up from 62% in November. And the big question for us here in Nigeria is what will happen in February when the Monetary Policy Committee of the Nigeria Central Bank meets. To help us make sense of all this happening around the world and in Nigeria is Bismarck Rewane, renowned economist and MD CEO of Financial Derivatives Limited. Great to have you on the show with us, sir.
Good morning. Thanks for having me.
Good to see you again.
Sure.
So I guess my question for you is, so many decisions, what is the outlook really globally when you look at all the decisions? Have we got on top of inflation? Are we almost there? Do we have no hope?
I would say that we're almost there.
Okay.
All right? It depends on what you can accept as a natural rate of inflation.
Okay.
At this point in the US, it's about 3.4%. And don't forget, we're coming back from a high of 11% 2 years ago.
Yes.
In the UK, we're having the same trend. And in Europe, we're having the same trend. So globally, food prices are coming down. Supply chain disruption is actually easing, apart from what's happening in the Red Sea. Mm. So generally speaking, we see a trend of some kind of disinflation. But having said that, the biggest risk is for you to go ahead of yourself and try to bring down rates, and then all of a sudden you reverse yourself. So central banks want to be sure, they want to be sure that the trend of disinflation is going to continue, and then you look at growth and you try to use lower interest rates to spur growth. In the US in particular, we've seen the jobless claims increase, we've seen the consumer coming back to shopping, and so we think that the US is likely in March to surprise the market by actually coming down in a notch, if not the next meeting.
Okay.
And politically, that'll be good for Joe Biden because, of course, we need that, and the world is looking to that. So there's a concerted effort to ensure that inflation comes down. And are interest rates the only tool for bringing down inflation? No, but it depends on how integrated your economy is. And we'll talk about Nigeria in a minute. When the economy is actually disconnected, you could use interest rates to kind of manage inflation, but you will not get there.
Yeah, indeed. Let's look at some of the emerging markets before we come to Nigeria. Turkey, it's battling 60% plus inflation.
That's very interesting because Erdogan was somebody who did not believe in orthodox economic philosophy. Okay. So he has now seen the limitation of that supposed patriotic philosophy of economic patriotism. First of all, they appointed a female central bank governor, with all due respect. She's very sharp, and she's now moved rapidly. I think the lag between when those policy statements are made and when the impact is felt in the market is another thing. But given that Turkey actually supported the admission of Sweden, the other country into
the BRICS.
Into the European Union.
Okay, yes, the European Union. Yeah.
That's right. They did that. They got some jets today from the US. I think we are going to. Turkey is now becoming a more orthodox member of the global community. We are going to see Turkish inflation begin to actually slow down. And it could be a very good example. how you can use interest rates to manage inflation and expectations.
Yes, especially in emerging markets. South Africa held its own rate.
Oh, yes,
steady.
that is interesting because South Africa also say they want to be sure that this inflation trend is sustainable. So I think that next meeting, South Africa will actually. But what we've seen in Ghana, where we've seen interest rates increase quite sharply, we've seen a sharp drop in inflation, and this is coinciding with two things. One, the deal with the creditors, and also the fact that new money has come in. And then we've seen an appreciation in the value of the CD. So again, the more integrated an economy is with the international community, the more vulnerable it is to exogenous shocks, but also the more reliable that economy is in terms of its response to positive economic policies.
Indeed. And there's a question I have to ask you. It seems like the time lag effect, there's differences I've observed in the way some of the advanced economies approach it. The advanced economies tend to wait longer to take those decisions. It seems because the transmission effects there seem more impactful. Whereas I find that we in our markets have made more successive changes over a period of time. Is there something, differences in our economic structure that impact the time effect of taking a rate decision and then the impact that is actually felt on inflation and the rest of the economy?
No, I think the structure of the economy is such that for Nigeria, bank deposits is only 40% of total GDP.
Okay.
In those other economies, bank deposits, our deposit liabilities are actually about 80-90%. So any move in interest rates, has almost a direct impact because that is, those economies are more interest rate sensitive because they're market based than our economy. For us, the major driver of price levels include many, but one of the most important drivers is the exchange rate pass-through effect.
Okay.
So whilst on one hand you're looking at deposit liabilities, liquidity, you're looking at how consumers react in terms of propensity to save, you're also looking at the ability and the propensity of Nigerians to buy foreign exchange because they are afraid of the next exchange rate move.
Indeed.
They are more afraid of the next exchange rate move than they are of an interest rate move.
Yeah, increase. And of course, we shouldn't forget the supply side drivers of inflation, which weigh heavily on our economies.
Absolutely. So if we go into the Nigerian discussion now.
We'll talk about that.
In a few minutes.
Yes, of course. The Nigerian discussion, there's a lot of anticipation because we thought maybe there might be another MPC last year and the bank did say it had met its statutory requirements under that. So February, given where we are, we ended last year inflation at 28.9%.
Yeah.
The NPR was at 18.75%. Yep. Which way Nigeria, I guess, is the
let's call a spade a spade. The Nigerian economy is, to a large extent, disjointed, right? So there are weak linkages between sectors. There's a disconnection between policy pronouncement and policy actions. There are long time lags between when you make statements and when the market reacts. Thirdly, there's a credibility gap. Statements that are being made, people begin to say, is this really true? Right? So, and there's a lack of coordination. So one can only go back to two events. One, the Central Bank Governor's statement at the Institute of Bankers, and two, the Central Bank Governor's statement
at the NESG.
At the NESG. Yeah. And what did he say? He said, one, the Naira is undervalued. Two, he said inflation target is 21.4%. He says I will return to orthodox monetary policy and we'll clear the backlog and the MPC will meet in February. That's what he said. What has he done? The OMO rates have gone higher while the primary rates actually came down and begin to go back up. We hear that the BDCs are now allowed to publish their rates and also for price discovery. And there's also talk of clamping down on forex speculators, which again is wrong. And that the MPC members, the story is that four MPC members whose terms have not come to an end are going to be dropped, right? The MPCs everywhere in the world, they are appointed, cleared by the Senate, they have a term. So it's not at the whim and caprice of anybody. So that in itself frightens the markets. The more autonomous and independent the central bank is, the more positive the outcome of the economy. Once you have a situation where even when people's terms have not come to an end, you now say, oh, because you don't like the look of their face, they got to go. That's wrong. That's wrong. Allow the people finish their term, and then you need to send new members' names to the Senate. They have to be cleared, and the meeting is on the 26th. What time are the new guys going to get to understand the issues and come? Then you have to come up with a clear inflation target. It can't just be as the spirit drives you, and that has to be designed. And then you now come out with a strategy on how to do. What do I think he must do? First and foremost, like you said, Turkey, South Africa, and all that. We have to accept that. I think that, yes, it is true, theoretically, using the PPP value, that the Naira is slightly undervalued compared to its official rate of 980.
Yeah.
But when you compare it to the market rate, then the Naira is overvalued. The Naira is trading this morning at about 1450 to the dollar, and 1,000 in the parallel market, and 1,800 and whatever to the pound. Now, the question is, if the parallel market is only 10% of total market activity, why is the tail wagging the dog, right? No, but that's not it. In economics, you have the marginal cost and marginal revenue concept. It is the price at which you buy the last item that matters. It doesn't matter whether it's 100, it's 80% or 90%. If I want to buy $1 today and I go outside this office, I will get it at 1450. Period. End of story.
Yes. And
therefore, what are you going to do to allow that rate come towards what you think is the fair value?
Yes.
Right? There are 4 things you must do. One is that you must allow interest rates begin to move in the direction of inflation, not necessarily one fell swoop. 2, you must remove all these restrictions and saying that you are going after speculators. Speculators have the potential to gain. They also have the potential to lose.
Yes.
Right? Thirdly, you must come out clean to say what your level of reserves are. You cannot say your reserves are $33 billion when in fact they may not be. So let's open the kimono and see what's there. 4, and most importantly, you must have an open market system. Central bank is a player, the biggest player. Therefore, you must come out and say, on Monday we are going to sell $100 million. Every bank come and bid. Also, on Tuesday or Wednesday we are going to buy, right? And anybody who has dollars can come and sell. So we'll have the bid and offer. That way there'll be proper price discovery. What is the risk? The risk is that on the first day, somebody comes out at 1,500 and buys everything, right? But because we know who it is, anybody wants to buy will buy from that guy at that rate plus. The next day, it will go to 1,600, right? Then a point comes when you can no longer sell those dollars because it's become too expensive, because money is what money can buy.
Yeah.
And what are we seeing the effect of this depreciation of exchange rate? We've seen antibiotics, price of antibiotics go up by 200%, augmentin. We've seen paracetamol, I'm talking about medication, paracetamol go up by 100%. We've seen the price of hypertensive medication, so all along, paracetamol and
so the pass-through effect there is pretty
quite
strong.
Pretty strong. But what are we seeing? That people are now beginning to cut back on expenditure. We've seen airline booking. In December, the forward booking rate load factors were at 105, 110%. We've seen for February bookings are down to around 80% international. And for March, and Easter is coming up in March this year, we've seen the bookings drop because you cannot buy what you can't afford.
Yeah.
So if you complement all of these things, you find that gradually you begin to have a market that shows the true value. And when you have the true value, inflation will begin to moderate.
You mentioned that one of the things that the CBN needs to do is to bring the interest rate closer to the inflation mark. So looking to February 26th, I think 25th or 26th, what should be the minimum market's expectation around a rate increase that would signal that the CBN is on that path?
I think that you need at least a 200 basis point increase from 18.75 to 20.75, right? Not only that, you need to mop up liquidity with special instruments. 3, you need to reduce this unorthodox interventions, which the central bank has started doing and announcing, but it's not just the central bank. 4, the primary market rates have to be going in the same direction as the OMO rates.
Okay.
What the effect of this is that the government borrowing costs will increase, so be it, right? And the market rate, the official rate of foreign exchange, must be as close as possible to where the primary market rate is, so that there's no question of buying at 990 and selling at 1,450.
Yeah.
So the airline IATA rates now are 1,281. So nobody's fooling anybody. Just come clean, tell us what it is, and then we begin to manage. Some things have to give. In other words, if I used to buy 10 bags of rice in 6 months, I'll buy 2, and I have to change my behavioral pattern, my consumption. See what has happened in the last month. You've seen the price of food items begin to decline.
Yes.
And
because people are adjusting, demand
absolutely.
is now being adjusted.
First of all, they bulked up for Christmas, but now we've seen even the price of rice has come down to something like almost 61,000 from 70. We've seen the price of beans down. We've seen the price of tomato seasonality down. We've seen those prices begin to decline. And what happens is that if food inflation comes down, core inflation begins to reduce, then the currency begins to strengthen. Naturally, that's the natural relationship.
Indeed. You said a lot there. You talked about transparency and the interventions and finding price discovery for the Naira. Let's talk a bit now about the broader impact on the rest of the economy. Looking at access to credit, looking at investments. So investments, either portfolio flows or just general investments, and the erosion in the real value of investments as a result of inflation. What signs of economic recovery are we seeing in the broader economy within Nigeria, given that we're seeing potential slowdown in inflation? Where are the hotspots potentially for economic recovery over the next
let me make
months?
it clear. The thing is that total factor productivity is going from -1 to +2.
Okay.
That is huge. But that means that in the next year, or maybe in 2025, we are going to be seeing some optimization of the use of capital stock. And that drives everything. Secondly, the linkages between sectors has been rather weak and tenuous. Now we are going to see stronger linkages. If, for example, you are concessioning roads, right, and then construction companies are now being used to maintain those roads and build those roads by the private sector concessionaire, right? You see that the same thing will happen at the airports and seaports. You will see those linkages begin to establish. But the credibility of the process, one is that how is public sector finance conducted? Are we credible? Are we spending money on all sorts of scandals about money going to private accounts and all that? That has to stop. Then one dangerous point in this whole thing is that there is an asset bubble that has been created in the stock market. Stock market has appreciated by about almost 28% in 1 month.
I mean, capitalization is now 56 trillion naira. Yes.
But and while turnover is about 10 billion naira, so turnover is 0.001 of. There's no liquidity in the market. It's an asset bubble. Yeah. It's going to crash, and it's going to take down a lot of people, right? So it is and it will lead to financial system instability. Right?
Especially given the huge share that financial services accounts for,
so
not capitalization.
I find it.
But that is that not also reflecting of what's happening in the bond markets?
No, but you don't know. No, wait. Let's take a look at it. Say, look, in 29 days or 28 days, the market has gained 30-something%, 1%, 1.25% a day. How? What the companies are still selling at the same prices, more or less. The companies their revenues have not increased. Nothing dramatic has happened.
So it's a speculative inflow.
It's a pump and dump issue.
Okay.
And the regulators have to come in to call people to order, because this is what Alan Greenspan described many years back as irrational exuberance.
Okay.
But it would bring down a lot of firms, it would bring down a lot of houses, and the regulators should please forget about their commission, because they get a commission on every trade, because that's where it is.
So what needs to happen?
No, they need to call people to, and make it not possible for you to move the market except you have a particular volume of trades. If you did that, then it will correct itself. But definitely a correction is inevitable. This asset bubble will burst. And then
we might see some sell-offs.
Sell-offs, and some people, there'll be some casualties with this.
Okay. Let's hope this is not too damaging, but very interesting discussion there. We've run out of time. Great talking to you about the global interest rate outlook, as well as the outlook for Nigeria. You're saying at least 200 basis points increase.
Yes.
Let's see if we get close to that mark.
Naturally, because there's an inverse relationship between interest rates and stock prices.
Of course.
The moment you announce that, the stock prices will move. And then, based on the bubble that was there, then it goes not just into
like a
correction.
double correction.
Absolutely.
So, but hopefully no doom and gloom. We want to start 2024 on a good note. So hopefully decisions that are taken this quarter can impact the rest of the year. Great as always to be speaking to Bismarck Rewane, CEO of Financial Derivatives and renowned economist on the global monetary policy outlook, including the policy outlook for Nigeria. I hope you enjoyed that discussion, because I certainly did. Well, that's all we have time for on Business Week. Let's continue the conversation online. I'm Rolake Akekugwe-Filani. Do have a good weekend. Bye for now.